Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today I want to talk a little bit about what the data is pointing at for January, and there's some mixed messages. I also want to talk a little bit about Bitcoin, of course, and some lovely Bitcoin charts that I want to show you. Then I'm going to talk a little bit about this short that I initiated yesterday on the housing market using VNQ as the proxy. And then I think we'll be saying goodbye and wishing each other a lovely weekend, since this is, of course, a Friday. So, without further ado, the S&P 500 was down for the first 3 days of this year, and it hasn't been down the first 4 since 1978. So the question is, why is this significant? Well, it means the Santa Claus rally failed this time around, okay? The Santa Claus rally failed, and that actually has some somewhat difficult implications going forward. So here, you can see a bunch of times that the Santa Claus rally failed, and what happened thereafter was January was red. January finished red in all cases except one, and even Q1's results, or returns I should say, were pretty muted. So, tells us to keep an open mind about perhaps not seeing the strong performance in January and Q1 that I have been talking about. Now, of course, this was always a hypothesis. It was always going to be tested. Nothing ever works perfectly. And it doesn't necessarily mean just because we failed a Santa Claus rally that we can't have a set of exceptional circumstances show up. But data is data and facts are the facts. And the facts and the data show that typically when we get a failed Santa Claus rally, we should be open to seeing a red January and a muted Q1. This is actually further supported by election year data. Now, of course, this year is an election year, and Q1 of an election year, typically we would expect to see muted results. So this, of course, is not something I was looking forward to seeing. This is not something I wanted to see, given that my base case expectation is we're going to have this big blow off top and then probably see some cuts and something break. And you already know the deal, right? You've seen this a bunch of times. But like I said, data is data. It's not about being right or wrong, as I've said a million times. It's about being on the right side of the market, yeah? I would rather this be flat wrong, but me not lose money, than me be completely right about this and still somehow get wrecked. So it's not about being right or wrong. It's about not being dogmatic, not marrying an idea. And like I said, the data is the data. The facts are the facts. And both the election year cycle is telling us to be open to a muted Q1 performance, and so is the lack of a Santa rally also telling us to be open to muted Q1 performance and even a red January. However, there is one caveat here, and that is that last year we saw a gain in the S&P 500 north of 20%. And usually when we see a gain north of 20%, it tells us that with 80% probability, we should be able to see an up year with an average return of 12.1% this year, or the year after we get that 20% plus gain in the S&P 500. So here's the table, right? Here's all the years and the returns that were north of 20%. And you can see that in 80% of the cases, we were higher the following year with an average and median gain of 10 and 12.1% respectively. So it's not out of the question that we could see high performance this year. It's not out of the question that we couldn't get an exceptional set of circumstances turn up. This is an extremely exceptional set of circumstances because it's not often that we get a parabolic blow off top in risk assets, right? That's not something that's commonplace. So we have been expecting exceptional circumstances for some time, and now it's finally at that point where I can't keep moving the goalposts, right? This is either going to go now, and I'm going to be right about this, or we're going to have to abandon ship. We're going to have to abandon ship here and say, okay, we're not doing this. If we start to base here, if we start to do something like this, if we start to trend down, then pretty hard for me to see a blow off top coming out of that kind of structure. So it's not the first time my hypothesis has been tested, and it certainly won't be the last. But it's important that when the market is trying to give you hints, when the market is sending subtle tells, such as this in a failed Santa Claus rally, it's important that you pay attention, okay? There's only so many hints and tells that the market will hand you. And if you completely ignore them through your own bias and dogma, then you're just going to be painting yourself into a corner and making your own life more difficult. Much better to accept you don't know anything and you'll let the market tell you. Under the hood, things still look broken. Okay, and they can remain broken for a lot longer than I can remain solvent, I can assure you of that. But just take a look at this, because it really does put it into perspective. This is the time it took for the US to print its first $1 trillion, almost 200 years, right? But the second trillion took only 8 years. And if we move down this column, you can see that the 18th trillion took just 7 months to turn up. This is indeed the same behavior as a drug addict. And of course, this can't continue forever. Can it continue for a while? Yes. But of course, this cannot continue forever. And this is why I spend so much time talking about Bitcoin. This is why Bitcoin remains the apex predator asset, because Bitcoin cannot be printed and inflated like fiat currency can. And speaking of Bitcoin, okay, former city execs are launching a Bitcoin depository receipts, which are securities backed by Bitcoin that do not need SEC approval. So pretty interesting time to be alive. I'm certainly going to be interested to see what comes out of this, if anything. Some of the most interesting data I could find yesterday was this here from Bitwise, okay? So Bitwise surveyed 437 financial advisors, and they found that less than half of all the advisors expect to see a spot Bitcoin ETF approved in 2024. So there's a lot of people that like to keep coming at me and saying the ETF is priced in, right? But you just don't seem to get it, okay? The ETF isn't priced in, and you can see that here, okay? If half of the financial advisors in charge of moving money in and out are not expecting to see an ETF, how could it possibly be priced in? And you can also tell this because a little piece of news, whether it's in one direction or the other, whether it's fake or real, moves the Bitcoin price significantly. So again, less than half of all advisors actually expect to see this ETF this year. Only 39% of advisors thought that we would get one approved in the year 2024, versus the Bloomberg ETF analysts, which pegged this likelihood of a January approval at 90%. But with that said, the vast majority see the approval as a major catalyst. 88% of advisors interested in purchasing Bitcoin were waiting until after the spot Bitcoin ETF is approved. So 88% of these advisors are actually interested in purchasing Bitcoin. They just don't think they're going to get an ETF this year. So what does that tell you? It tells you that this thing isn't priced in, and if it is to be approved in, whether it's in January or whether it's later in the year, 88% of these advisors are looking to put their capital that they control into Bitcoin. They also found that access is a major barrier to adoption. Only 19% of the advisors that they surveyed said they're currently able to buy crypto in client accounts. Again, it tells you that a tsunami of money is parked on the site, but it just can't get in yet because of these regulatory hurdles and, of course, the custody hurdles. Bitwise also found that once you invest, you tend to stay invested or want to increase exposure. 98% of these advisors who currently have an allocation to crypto in client accounts plan to either maintain or increase exposure in 2024. Tells us to keep an open mind about seeing major capital inflows using this ETF as and when it's approved. This thing certainly, in my opinion, is not priced in. And with all that said, the charts still doing chart things, aren't they? Okay, check this out. Flash crash, a little bit of sideways, and then boom, parabola. Flash crash, a little bit of sideways perhaps, and then boom, parabola. Again, pretty difficult to find a really bearish chart out there at the moment. We've also seen Bitcoin's price break out, retest, and look to resume off of the upper Bollinger Bands on the daily chart, with the Bollinger Bands modified to 1 month time frame. Again, tells us to keep an open mind about seeing another repeat of this right here. And speaking of Bollinger Bands, John Bollinger, the creator of said Bollinger Bands, thinks that Bitcoin is set to break higher. So again, take a good look at this, right? We've had the squeeze, we've had the retest of the lower Bollinger Band, close back above, and now we are looking to resume to the upside. Again, John Bollinger himself thinks it breaks higher. And finally, I've left myself this little note here, this little set of notes to go with this short. So yesterday I posted this to Twitter. I said, look, I called out 4 weeks ahead of time in that video that was called something along the lines of long Bitcoin, short property. I said updated today, meaning yesterday's video, I called it out again. And I said, look, we got breakdown, retest, and resumption in play. I am officially short VNQ as of right now. So we got that breakdown, retest, resumption. You can't really see it here, but if you zoom in and draw your line for yourself, you'll see it. We broke down, retested it, and then started to resume lower. So I am officially short VNQ, and we'll see. Now, the reason I put this here is because a lot of people were asking me questions about this. And this is just one of those trades, in my opinion, where there's not really any logic to this short, okay? This is a purely technical setup in a way. There is an argument both ways. There's plenty of reasonably logical sounding arguments for why this thing would break down. There's also plenty of reasonably logical sounding arguments for why this thing might continue higher. But the common questions I keep getting about this housing short are, what about the 18.7 year real estate cycle? Yeah, what about it? So it's absolutely a valid cycle. It is absolutely something that has shown consistency over many, many, many years. It certainly exists. As a cycles trader, you have no problem convincing me that a cycle exists. A lot of people don't believe in cycles, but obviously, as a cycle trader, I acknowledge this cycle, I understand. But from time to time, the cycles can top early, okay? They can top early, they can top late. And I just personally think this current 18.7 year cycle has actually topped early. That's my opinion. I could be wrong. Maybe I'm too early to the short. as one of you pointed out, Burry was 2 years early to this short as well. So maybe that's what this is, right? Just history repeating. It's perfectly possible I am too early on this short. Time will tell, right? And we'll know because we'll get invalidation by moving across here and stopping me out. We'll break out the downward sloping red resistance lines. And, if we resume something like this, right, and I get stopped out, then yeah, I'm wrong. I'm too early, and maybe we can look for a short in a couple of years' time. People were also asking me about the rate cuts, right? Are rate cuts coming? Shouldn't houses go up? Blah, blah, blah. Don't mortgages get cheaper? Yeah, they do. But if you look at the historical data, typically what you see is as the cuts start, house prices decline. It's not usually as simple as cuts occur, house prices start to rocket. Assume, for example, you've got some cash in your account and you're waiting to put this into property. Do you wait for the first cut and then go out and get a mortgage? Or do you think, well, if the cutting cycle started, might as well wait a few months because they're just going to keep cutting rates for a few months and then I'll be able to borrow near free again, right? So of course you're going to do the latter, if you're financially astute, that is, at least, rather than just wait for the first 25 basis point or 50 basis point cut and then rush out and get a mortgage when, likely more and more cuts are coming thereafter. So one, I don't really think cuts are stimulative for house prices to go up, at least not in the near term. Longer term, of course it is. The cheaper the money gets, then the more buoyant that is for the housing market. But in the near term, it's not something I personally have observed when looking at the data. And another valid question, which sounds logical, I agree with that, it sounds logical, is, well, Camel, aren't you calling for a melt up, right? Aren't you calling for this blow off top and a parabola? And if that's the case, then aren't I early again? Isn't this another sort of Michael Burry point, right? Maybe I've shorted this market too early, and shouldn't house prices be expected to go up with the stocks and Bitcoin and everything else? And then we have that crash. And the answer is, yeah, that sounds reasonable. That sounds reasonable. But as a chart guy, okay, look, this is what I see. This is what I see. I see a downtrend that's well established. I see plenty of lower and lower and lower and lower and lower highs. Of course, this high is above this one, but it's not above that one. And what looks to me like rejection at resistance followed by a breakdown of this. So I'm a chart guy, right? And for me to be invalidated, obviously we could see this, like I said earlier, right? We could see me stopped out and we could see a breakout of this. And then, yeah, I'm wrong. I'm flat wrong. But for now, if this continues to break down, like I suspect it will, if we continue to do this, then, all of these logical sounding points, which I kind of agree with when you just say them out loud, right? Yeah, there is a cycle, right? And yeah, I'm too early. And, yeah, cuts are coming. Yeah, I agree with that. And yeah, I am calling for a melt up and then a crash. So all of this sounds reasonable. But again, the charts are the truth. The charts don't lie. And assuming this thing continues in this direction, then that's the reason for the short. If it does this, I'll look like a genius, right? And if it does this instead, then I'll just look stupid. And either way, that's fine. You win some, you lose some. This is trading at the end of the day. So I hope that clears that up. I don't want to spend too much time on the charts because obviously tomorrow is Saturday. We're going to come back and do the weekend's deep dive TA as always. For now, the dollar apparently working on a breakout. Okay, so that could be the 3-year cycle low in here. It's certainly within the timing window. It's earlier than I was hoping to see it. It's earlier than I was expecting to see it. But unless we roll over pretty soon, then we have to be open to marking this as the 3-year cycle low and expecting a bunch more upside from the DXY. So it's going to be interesting. I wonder if, given that we've got CPI next week, I wonder if we do something like this and then we get the CPI and we roll over one more time. I wonder if that happens. Maybe I'm being too optimistic. As ever, one day at a time. Bitcoin, I'll just quickly touch on Bitcoin. Look, Bitcoin's still doing whole heap of nothing, isn't it? Still kind of moving sideways. Still above its 60-day and weekly cycle low. So happy days, right? Until we invalidate by sweeping that low, then I remain bullish bias. Gold seems to be on its way to that cycle low. I might drag this a bit lower down and we'll see if we can find one soon enough. But overall, that yellow squiggle still convincing me that I'm correct at this moment in time. Oil, as you can see, still getting rejected at resistance. So that can change, but the stop's moved up and that's all I have to say about that. And the stock market doing weird things, right? This is undeniably a failed cycle now, okay? That is a failed cycle. So it tells us to be open to seeing, at the best case scenario, something like this into that next daily cycle low. In fact, I will move this down here. And this becomes kind of the base case now for the stock market. It tells us that, that data I was showing you at the start may well be, in fact, I'm going to leave that squiggle here. That data I was showing you at the start may well be coming to fruition through January. So we'll see, right? We'll see. Lots of conflicting data. It doesn't mean that we can't do something like this and then rocket higher out after CPI next week. Perhaps if that's on a 2-handle, then, I wouldn't be surprised at all to see something like this. But for now, at least, the warning signs are there, right? We've got a failed cycle and the NASDAQ looks even worse, as you can see. The Dow Jones still kind of hanging around. I've choked the stop up as of yesterday or the day before. So we'll keep pushing these trades and at some point it'll become unreasonable to stop pushing them. And at that point we will take the profit. I'll discuss all of this in full detail over the weekend. But until then, I hope you're doing well in life. I hope you have a great weekend. I'll be putting out a members update for you guys tomorrow as well. But until then, I don't think there's much change, to be honest. And in the meantime, take care from me. All the best. Cheers. Bye.